Hello everybody and welcome to another session. Today we're going to learn a few things about reading the chart, analyzing the chart. We're going to learn about candles and how to get started with trading, most especially reading the candles, setting up a watch list, and doing a little bit of analysis, and then getting started on a trade. So welcome, hope you enjoy this session. Today's session, I'll start with candles right here. And what candles are all about is how you record the price action of a stock in a given time period. So what a candle is just showing you what happened when the stock market opened, what happened along the day, and what happened when the stock market closed. And right here is a representation of that. We'll use this black one to explain what it's all about. So a candle has three sections. It has a body, an upper shadow, and a lower shadow. And just like a regular candle, the shadows are usually called a wick, like a candle wick, and they have an explanation as to why that is. A wick is just an extension of the highs and the lows of a price action. Now, up here we see two candles, a red one, a green one, and a red one. And what that means is one represents a different direction of movement, and the other one represents the opposite direction. The green one represents a bullish candle. It's called a bullish candle, and what it means is the price was moving up. It's called bullish. And the red one is called a bearish candle, and what that means is the price was going down. Therefore, when you see a green candle, you know it's going up. When you see a red candle, you know it's going down. So what does it mean, or when you see these candles, what do you see? So let's assume it's the beginning of the day and the stock market opens, and the price of that stock is at this level where it says open. So along the day, the price might go down to the low and go up to the high, and then at some point it's just going to be moving up and down around this region. And then when the market closes, the price will be at a certain point, which is like here, the close. So for a bullish candle, which is a green candle, something that's going up, you'll know it's a bullish candle if the open is lower than the close. And when it comes to the bearish, is the market opened and the price was right here. The price went up and down, so the high was that and the low was here. And then when the market closed, the price had reached this level. So that means with the bearish candle or a red candle, which means the price is going down, the price opened at a certain level and closed lower than the initial price. So those are the two differences. Green is going up, red is going down, and what green is all about is open is below the close, and what red is all about is open is above the close. Now I'll get you to also understand one thing, that sometimes these candles don't look exactly this way. Some of the time the wick or the shadows are longer than expected or shorter than expected. The bodies are smaller or larger. It's all a description of what a candle is. It doesn't mean that because it doesn't have a upper shadow or a lower shadow, it's no longer a candle. It's just the price on that day had a different activity. Now, candles represent either the day from when the day started to when the day ended, or an hour where the hour started and the hour ended, or a minute where the minute started or the minute ended, or a 15-minute period or a 30-minute period, or a 1 week or 1 month. So when you're looking at the chart, make sure you're looking at the right time frame, which is you want to choose a time frame that suits your expectations. So if you want the stock that will move within a day, you might want to choose a time frame that is less than a day, which is like 1 hour or 15 minutes, so that you can see what has happened across the day. If you want to choose, if you want to invest in a stock for maybe a whole year, it's advisable to probably start focusing on the daily chart or the weekly candles. But that being said, let's go now to how to make a watch list. A watch list is generally a group of stocks that meet your expectations or criteria, and these are the stocks that you want to trade or buy or invest in. So you have a specific desire or a specific goal that you're looking for, and these stocks represent that expectation or those goals. So there's this tool we call Finviz, and what Finviz is something called a screener. Under Finviz, we have something called a screener, and hope you can see that. I think there's something blocking my view. So yes, Finviz has a screener, and right here on this menu bar, there's you select a screener. Then under the screener, now you have an array of things you can choose to filter out whatever stocks that you want or wish to invest in. And this is a criteria that meets your target or what you wish to invest in. For example, you can say I want to invest in stocks that are of a certain price range. Let's say you want a stock that is let's say $20. You select that, or under $20, you select under $20. Now you can see right here that you have a total of 4,151 outcomes, stocks that meet that criteria. Then another filter you can use is current volume, and by volume I mean how many of the stocks are traded in a given day. I would recommend something that is slightly above 500,000 in volume. And when you select that, and now your list has dropped down to 1,035. And then the next thing you want is let's say earnings report. You want something that has an earnings report, let's say next week, for example. So you select next week, and now the number drops down to 118. So when you're making a watch list is, these are stocks you're interested in, and you are actively watching them so that you would invest in them. So 118 is quite a huge number, so you might want to narrow down to a smaller number like 10 or 15. So these are just the descriptive filters, you can now choose another filter criteria like the fundamentals and say I want stock that has a price to earning ratio, which is PE, of let's say over 5, for example. That will narrow down your list to 23. And then you can also say I want something that has some cash flow. So you want a cash flow of let's say over 10. That narrows down to 9. Okay, 9 is a good number. 9 is something you can work with. And what a cash flow means is this company is making enough money to where they have enough cash at hand, and that's a good thing. Now right here you have a list of 9, and this list you can then filter or sort them by whichever criteria you want. Let's say you can sort them by industry, you can sort them by sector, you can sort them by price to earnings ratio, you can sort them whichever way that suits you. I usually prefer sorting them by volume, which means the higher the volume, the better the action. And the one that comes at the top is this one, Magnite Incorporated. It's a communication service company and is based in the US and all that. It does advertising. Now you can see the industries and see if it's a good idea to invest in that company given the industry. So now that you have this list, you want to see the chart of that stock, and when you move your mouse to that stock right here, it gives you a chart. You do the same here, it gives you a chart. You do the same here, it gives you a chart. Anyways, the charts on Finviz are not really that user friendly. I like using a different website to do the charting, and that is called a trading view. So let's go right here on trading view, and under trading view is tradingview.com. you see chart. Click on chart, and then what that gives you is a chart that looks like that. And what we want is our stock, which was MGNI. So type there MGNI. My keyboard is a little bit slow. Like that, and we want this with the Nasdaq. We don't want this other one. I don't know what country that is. So select that, and as you can see, we have a chart right here. Let me close this for now. And with this chart, you can see now we have candles, the green, red, green, red, green, red, all over the place. So like I said, red represents going down, green represents going up. And as you can see, wherever there's a number of reds, it's going down, and when there's a number of greens, it's kind of going up. Red going down, green up, red down, green up, red down, green up, red down, green up, red down, and you know how it goes. So all the way up to where we are today. So this is the chart you're looking at, and I said under the chart, the candles, that you want to see to it that you're choosing the right time frame. So if you're looking at daily charts, that means each candle you see here is 1 day, 1 day, 1 day, 1 day, 1 day, 1 day, 1 day. Now you want to probably change that to 1 hour, so that you can at least have an hour along the 12 hour or 24 hours, depending on the stock or stock market. But for the most part, having an hour gives you a better idea of how the stock performed along the day than having a daily chart. So choosing an hour is a little bit better than choosing a day. If you're an active trader, you might want to choose 1 minute, because 1 minute is very active. It shows you minute by minute, and you just click on the side here to zoom in and expand that and make it look nice. But as you can see, some of the candles are tiny dashes, and it looks a little bit weird. So let's go back to the 1 hour chart. Zoom out a little bit like that, and here we have an action going on, up down, just like all those other stocks. What we want is to figure out when do we buy and when do we sell, and that's what we call technical analysis. So on this chart, you want to figure out, if I buy, do I buy right now, or do I buy when it gets to 12, or do I buy when it gets to 11, or do I buy when it gets to 14? Where do you want to buy and where do you want to sell? And one of the ways to do that is to use something called an indicator. An indicator simply means a tool that indicates what's going to happen next, or what might happen next. And under trading view, there's something here called indicators. You select that, then technicals, indicators, scroll down to one indicator I like using is called relative strength index, right here. You select that and you close this, and now right here we have a little window showing something going on. Now, as you can see, this is RSI, and that the purple line is what the RSI is. Now, right here on this section, we can see there's another scale that has the RSI, and under this one, there's a section here where it's a little bit like purplish or tinted purple, and it's like a band which starts at 30 right here and goes up to 70 right there, 70. So what that means is there's a section between 30 and 70 that RSI likes to move in between. As you can see, it's usually just in between those lines, and to know what's going to happen next, you want to figure out if this RSI moves either outside that band or that is above or below, what happens. And let me just show you a few things here with a line like this. Let me select that. Right here we have that line. Let me put that line there. Let me put this line here, right here. Let me put another one right here. Let me put another one right there. Let me put another one right. Okay, the next one is not really that significant, but let me put it there. Yeah, so as you can see on these lines, whenever this RSI goes below 30, it kind of hits a bottom, and whenever it goes almost close to or above 30, it kind of hits a top. Then next one, when it goes below 30 or close to 30, it's like it has bottomed out, and when it goes above 30, it missed the top, and then it goes below 30 or around 30 again, it hits the bottom. And then as you can see, every time RSI goes within this band of 30 and 70, the chart also moves up and down, up and down. So depending on where the RSI is, you can say it has either reached the bottom or reached the top. So if RSI is down, it has reached the bottom. If RSI is up, it has reached the top. And now you can use this to predict where you are and where you want to go. For example, where we are right now, RSI is close to 30, and you can say it's probably getting to the bottom. If you want to buy, you might want to buy between this range right here, 12 to like 11 to 12. So that is given time. If this keeps going down a little bit, RSI will hit the bottom, and if RSI hits the bottom, which is probably around 12 here, 11 something, you then are at the bottom and you want to buy at that level. So when RSI hits the below 30, we usually refer that to as oversold. That means the sellers have been selling, and they've exhausted the selling activity. And whenever it hits the top, it's the buyers, it's called overbought, which means the buyers have been buying, and they have reached a point where there's no more buyers. So whoever is left is people who want to only sell. So this is what you use to determine when to buy and when to sell. So whenever it's overbought, that means everybody who wants to buy has bought the stock. The only way to go is selling. So if you bought somewhere else, this is the place you want to sell. And if you've been selling and people have been selling and they have reached the point where there's no more people selling, that's the point where you need to also sell, because that's the end of that trend. Okay, and as you can see, there's some sort of trend line going. I'll just use one of these again. So like from here to here is a trend. Let me use green for that. And from here to here is a trend, and I'll use a red. And from here to here is a trend, and I'll use a green. Then from here to here I'll use a trend, and I'll use red. You get the picture. One more, let's say from here to here, green. From here to here, red. Okay, as you can see, there is a trend that you can follow, and this green one is an upward trend, downward trend, upward trend, downward trend, upward trend, downward trend. So stocks have that up and down, up and down, up and down, and knowing where the bottom is and the top is determines whether the trend is still going or the trend has ended. So what you want is to come in at an upward trend when it's beginning, and get out at a downward trend when it's starting. So come in here, get out here, come in here, get out here, come in here, somewhere down here, maybe get up here. So that's how you determine when to get in and when to get out. And let's look at another one, the second one, LXPX, and see what it looks like. So you come back here again and you type LXP, okay, and as you can see, it also has the same, almost the same characteristics, ups and downs, and as you can see, we have the RSI, and the moment RSI hit the above 30, above 70, it kind of reached the top, then it dropped a little bit, and then went again above 70, it kind of reached the top, and then it dropped again. And this is a little bit crazy. It's not really stable. You cannot really predict what's happening. It's kind of consolidating, stagnating, and simply means like a lot of people want to buy this stock because they don't want it to go down. So every time it tries to go down, it stagnates. Every time it tries to go down, it stagnates, but every time it goes up, it jumps really high and jumps really high. And that shows you that this stock is kinda in high demand and people are buying more than they're selling. We can change here to a daily chart and see what it looks like. Again, it's the same thing going on. Kinda tries to go down a little bit. RSI is down, goes up, RSI is up. Stagnates, tries to go down. It's finding difficulty going down, but at some point here it really went down, and when the RSI was at below 30, you can see everything stagnated. And then when it started going up, it started going up again. So if you want to buy this stock, then you are watching out for it to go down to a point where RSI is around close to or around 30, and then that's the good time to now buy. So if you find a stock and this is what you look at or what you're seeing, know that there's still more time for you to keep waiting. But if it's the opposite, let's see, this is reached the high. Let me see on a yeah, something like this is trying to go up. So whichever point you get to, you want to make sure that you're getting in at the right point, and an indicator can help you with that. So that concludes today's lesson. We'll continue from here next time. Thank you all for joining. Happy investing. See you next time.